Good morning, everyone, and welcome to the third panel session around investing in the energy transition. Thanks for joining. My name is Damian Pearson. Brief background about me is I was a former investment banker, and then I was in a private equity fund for some time, EMR Capital, and just starting a new private equity fund based out of Abu Dhabi called Oryx Global Partners. So what I'll do is I'll just let the team introduce themselves briefly, and then we'll get started.
Hi, great to be here today. I'm Ling Lu, based in Hong Kong, looking after the metals and mining business for Greater China at Standard Chartered Bank.
Hi everyone, Stacey Golokin. I look after the investor relations for the Asia Pacific markets on behalf of NexGen Energy, which is a Canadian uranium exploration and development company.
Hi there, Shaun, Cartwright, Chief Investment Officer at Anadara. We're in funds management and structured investments.
Morning, everyone. Robert Wrixon is my name, and I run Starboard Global Limited, which is an early stage exploration, mineral exploration project incubator based here in Hong Kong.
Thank you. So maybe just to get started, I think yesterday, the panel sessions were really around focus on gold and very much focused on that as an investment class. So it's good to be talking about energy transition and the investment opportunities which are available. I think really just to kick things off, and maybe to you, Ling, we're kind of entering this era of deglobalization and, supply chain security driven by geopolitics, and really securing critical minerals is becoming a focus of, European, US governments for both facilitating energy transition and more broadly. I mean, how achievable do you think, excuse me, how achievable do you think this is?
That's a great question, Damian. My answer to that is, in the short term, challenging. In the long term, maybe. So from many of my conversations with Western companies across the supply chain, the challenge I hear the most is processing, basically the midstream. So how to convert the concentrate into battery raw materials, oftentimes the battery grade sulfate, hydroxide, and carbonate, and further down the line, more customer tailored products like PCAM. An associated question I hear also is how can the West compete with the low cost in this part of the world, particularly China? If we look deeper into this question, actually low cost is not the reason, it's actually the result. It's a result of the sufficient supply chain, a large pool of the junior engineers, and the availability and affordability of the reagents and also the power supply. So ultimately, it's the whole industrial manufacturing system. So the West had mastered that previously in Italy, in Germany, and also partially in the US, but they're losing it. I was talking to a CEO of a Western company in Shanghai yesterday, and he half-jokingly said, almost everyone in my company wants to work 4 days a week, but paid 4 times the salary. Well, if we look at CATL, almost all the employees work 6 days a week, 12 hours a day. So can the West really compete? Maybe in mining, in upstream, but for the mid and downstream, I'm not sure. Another interesting thing to watch out is, unlike the Chinese mining companies, those conventional ones, mostly they are state-owned. If we look at the battery companies and battery materials companies, they are mostly privately owned. So there's lots of entrepreneurship, there's some innovation, and also the right decision-making in the long term. So they want to pass their business on to their sons, their daughters, and the grandchildren. So they wouldn't be bound by the share price performance in the next 3 months. So to your question, the Western governments, I think they have realized that. So short-term financial return would not fundamentally give a solution to the supply chain security. And that's why we have seen the government subsidies across countries, and also protective regulations, and most recently the tariffs. Will it work? We're yet to see, but time will tell.
Sure. And I think, you sort of pick up on this from an investment perspective at looking at some of these processing technologies, and be interested to get some of the views of the rest of the panel. But, certainly I've seen when I look at them, it's quite hard to make an investment in some, whether it's some recycling technology, et cetera, which has been proven up at lab scale in the Western world versus where you can go and look at, you look at China and, they've rolled out, in which case, many plants, et cetera. I mean, you've seen this with nickel. Nickel HPAL is about the best example, right, I can possibly give, which is, you look there and you look at what Indonesia has been able to do, which is just capitalize on that technology. It makes it quite hard, I think, from an investor perspective to take the risk and the returns you need. I don't know what your views are on that.
So one thing that Ling said that I agree very strongly with is China's low cost is the result of their cheap power. And I think this is one thing that the West are getting incredibly wrong. We're trying to transition into a cleaner energy future, but we're cutting access or cutting supply to our cheap power way too soon to be able to make that a reality. I think if you have a look at the growth of China to become an economic powerhouse, it's on the back of access to cheap power. And I won't speak a great deal about uranium. I think we've got much better qualified people on that. But I think Australia, where half of the room is from, and most of the West, I think we really need to go back if we want to compete and really want to be able to achieve these net zero. Well, let's just say net zero 30 won't happen. Let's call it net zero 50, maybe. If we really want a realistic chance of being able to do that, we need to get serious and get some cheap power by any means. Otherwise, it's just a bit of a pipe dream, and we're going to be relying on new technologies rather than trying to push these current technologies in the renewable energy space up a hill with expensive power. And countries like China and Indonesia, they're just going to bypass all of the West and leave us for dead.
Sure. And Australia's perhaps one of the worst examples of having access to huge resources and on the highest cost of power in the Western world, right?
Yeah, let's sell our gas to China and then buy it back. I mean, Australia's just lost the plot. I think, and look, the problem is we're way too overgoverned, and we're too beholden to these ideals that are just unrealistic. And I think if you're watching the political temperature across the globe, I think everybody in this room's here because we all want to make money. We're all investors, right? So I'll speak a little bit more freely than I otherwise would. If we're all serious about making money, the things that the government are trying to sell us, it's all rubbish. And it's just to appease and appeal to a part of the community that just don't have the ability to make this happen. It's the people in this room and rooms like this that are going to make the energy transition a reality, not the fools in Canberra selling our... Anyway.
Yeah, I couldn't agree more. Maybe just changing tact a little bit and talking a bit about the battery value chain. I mean, obviously lithium's been through a challenging sort of 12 months. Electric vehicle sales have stalled a little bit. I think certainly, China, I think it's about 11 million vehicles sold last year. Europe was probably the disappointing area. I guess if you sort of look at lithium demand, do you think you need electric vehicle sales to return and to actually stimulate lithium demand again? Or, is the storage markets going to be sufficient to maintain, reasonable demand outlook for lithium to actually, give investors some hope for investing again over the next sort of, 2 to 5 years, medium term? Taylor?
Yeah, so I think whenever we talk about EVs and the electrification process, I think most people put too great a focus on lithium. My view, and I think it's a really good point you raise about falling EV sales in Europe. Our main fund, it's called the Battery Transition Fund, and we look at the cutting edge investments that are going to change and evolve existing battery technologies and find new ones. What we're finding in Europe is the synthetic fuels that have been produced now for combustion engines. I'm a car nut, as anyone that knows me will know, and even though I invest heavily in this space, I'll never drive an EV. And I'll be backing whatever we can to deliver these synthetic fuels. But I think the real growth for vehicles and lithium will be in the 2- and 3-wheeler category, not necessarily the 4-wheel category. I think in densely populated parts of the world like Asia, where they have huge 2- and 3-wheel user bases, I think that's going to be a really strong and popular part for lithium. But I think with the lithium price where it is and with the lead time into production, we're relying on the main producers now, and I don't think we're going to be able to catch up to make lithium a truly, I think in our earlier meeting, I think we were talking about the target is 4,000 megatons, and we're at about 1.3 or 1.4 last year. We're a long way off being able to hit that target. And I think for proper grid storage, we're going to be looking at vanadium batteries, which are a better technology for a larger scale application. One of the companies we've invested in have developed atomic batteries, and batteries maybe not the right word. They should be energy generation devices because they use decaying isotopes. But we think those sort of things are going to help to bring back the lithium market, funnily enough, and some other really cool tech like dynamic inductive charging that helps EVs charge while they're driving. So you need smaller batteries. Maybe I should let someone else speak.
No, you keep going.
No, you go, Rob.
Well, just to go back to your, I mean, that was a good diversion there, actually, Shaun. And I like the way you brought up your own investments as well. That was pretty clever. But no, to go back to your original point about, I think we need to be realistic here about the EV penetration was always going to stall, right? In the beginning, you're pushing out an open door. There's people who love the idea of a battery-powered car and getting rid of their internal combustion engine, and they live in the suburbs and they've got a place they can plug it in. This is easy, and it was always so you get that level of penetration. It was always going to stall, right? It's going to be tougher for people who live in an apartment building without any wiring, and people who have to travel long distances and they're worried about charging. So, but I think what's great about what EVs have done so far is that they've got enough critical mass. There's cutthroat competition in the battery technical spec performance space now. I mean, you see what BYD are doing, Tesla are doing. They're all trying to compete, and so what you will get is the ability to get further penetration as technologies improve. So range will improve and charging times will improve. They already are. And with every step, you're going to convert more and more people into. So it's a process. The easy wins have been had, but there's more to go. And I agree, the 2- and 3-wheeler market, absolutely. Anything to do with transport and carrying things, obviously phones, whatever else you carry in your pocket, lithium's always going to have a massive advantage. Stationary, battery, I agree. There might be better if it just has to sit on the ground and you don't need the lightweight advantage of lithium. It doesn't really matter whether you use lithium or not as the electrolyte. But so it may or may not compete there. But I, personally, and I don't hope there may be some lithium people in the room, but I'm not a huge fan of lithium and was what we do. Like we invest in the space, in the upstream space of what Starboard does. I'm not a huge fan of lithium as an investment. I mean, I could be proven wrong. I have been in the past. Anyone who's listening from the lithium space, but I just kind of feel you had a lot of growth in the beginning because all of a sudden everyone wanted lithium and the outlook was strong. Now you've got to a point where it's more of a steady state growth, but there's a lot of lithium in the world. You've got a lot of big guys. There's a lot of big lithium deposits out there that haven't yet been developed. And I just kind of think, are you going to have that sort of exponential growth that you really need for massive undersupply and therefore a price spike? I'm not sure. Can the price go up from where it is today of LCE? Probably, but I don't think it's going to see where we're not going to see where it was before. I mean, unless something drastic happens. That's just my opinion.
Yeah, maybe just to add, I think we need both EV and energy storage to boost the demand. However, what's more important is around the infrastructure, so around the charging stations, to support the growth of the electrification. Given the current lithium price, and possibly we wouldn't be able to get back to the peak of the lithium price. But we do see lots of interesting development in this space. So, for example, we're not necessarily just seeing the production of lithium carbonate and hydroxide. We're seeing more intermediate products coming out, like lithium sulfate, lithium chloride. This is to it's also a result of the lack of infrastructure in South America and also in Africa. The transportation cost is to tackle those issues. So why not we make a intermediate product, and then where we can further process in the countries like China, or say well, I don't know where else, to be honest, for carbonate and hydroxide, especially for battery grade.
I think, I mean, actually, in Repo just was speaking before us. I think he, very similar thematics are coming out, right, around, changing battery tech, and the outlook for lithium. I think it's been pretty consistent over the last couple of days. I think maybe just a couple of questions, maybe on observations in sort of China. If you look at, where EV penetration is now, for example, how much growth can be achieved? I mean, and why has China been able to grow EVs so much? You hear this whole thing in Western markets about range anxiety. I spent a reasonable amount in China. I've never heard that term actually used. Maybe I don't know the Chinese word for it. I mean, that's the problem. But it seems to be that, that certainly in China, you might have this huge penetration, yes, driven by government policy, but it's been accepted and developed some cutting edge vehicles. Because I think that all sort of plays into as well, the export of those vehicles into new markets. It's quite interesting when you sort of look at the markets without car manufacturers, actually, like Australia and the UK are probably good examples where Chinese EV penetration is doing really, really well. I think BYD, #1 seller in Australia, #1 seller in the UK right now. Maybe just some of your thoughts around that.
Sure. So if we look at maybe 15 years ago, someone, ex-Volkswagen executive who became a senior government official, had this concept. And then the policy came out and the government subsidies helping those companies to grow, basically like the venture capitalist sitting here. That's what we are trying to do to help those technology early startups to be equipped to grow. And then back to the the infrastructure investment, which provided a very robust support to enable this as well. And then the private ownership, lots of innovation and entrepreneurship involved in. So the competition, the price war, everything basically it's a. If you haven't come back to China in 3 months, then basically every time you come here, you will see significant change each time, and surprise even the locals. So I guess it's a whole system where you have the policy support, where you have the innovation, the consistent R&D investment, and also the engineers, the technical side who can support that as well. So yeah, it's very interesting. And if we go back to the question around the demand, I do see China demand for EV remains very decent, although the growth rate is slowing down, but that's natural given the base has grown significantly. But we do need demand from outside of China to support this even further.
So if you sort of look from an investment perspective, I think lithium, we're saying, is a bit on the nose. I mean, invest in energy transition was concluding, copper is the way to go. What's your view?
I think it's a really good barometer. If you look at all the lithium companies on the ASX, they're all of a sudden no longer lithium companies. They're buying assets in every other mineral. I was talking to someone even yesterday. So you look at how the investment community are looking to other things to invest in, and these lithium projects are just being put on the shelf. And I think Rob raised a really good point about the global big producers. Lithium is the most abundant mineral on Earth. There's no risk that we're going to run out. It's all about deliverability, which has always been the case with lithium. But I think some of the other technologies like sodium batteries are looking quite promising. I've already mentioned vanadium and things like that, but I think copper's that's important for everything. I mean, AI, batteries, nickel, obviously. So yeah.
Yeah, agreed. Copper's, it's the one that it raises its head quite a lot because it's so big, right? And you need it, and not just on the micro scale for every single car, every single EV is a lot more copper in it than an ICE, but then also at the macro scale, every time you build a wind farm or a solar farm, you need a lot of connectivity. It's all copper. You need to connect it to the grid. And also with renewables, people sometimes forget that renewables, obviously, they sometimes are on and sometimes they're off. And you need to, I can't remember the exact percentage, but for every megawatt or gigawatt of renewables that you add to the system, a network guy in Germany told me that they have to back that up with 75% of power that they can rely on. So for every copper wire that's put into to connect a wind farm, they have to connect up another 75 megawatts to something like a CCGT plant or a coal plant. Well, not coal, I guess not coal, but something that they know that they can rely on just in case the wind's not blowing. And so you're almost doubling up all of the wiring that you need if you're going to retool your entire your generation system that your country relies on. So copper is required for all of this. And if you look further into the supply and demand aspects, lithium. Okay, again, upstream for where I am, lithium. There's a lot of stuff out there. And as you said, a lot of lithium players that haven't quite made the grade are changing to something else. Gold's popular, I hear. Uranium as well, but and then you look at graphite, and China has it locked up, really, and you look at nickel, and China again just made the move into Indonesia, but no private company would ever do that. I'd say the IRR was about 3 or 4%, but they said, here you go, there's 20 billion, we'll build the smelters, we'll build the mines, but we just want all the offtake, and boom. They now control that supply chain as well, and so. But copper's too big to just control like that, and so therefore, if you're in the market and you're looking for a true market where you can, if you find a great deposit, you can get there and the outlook looks good, but you can see that, right? All the majors are there already, BHP, Rio, they're all clearly focusing on copper, but that also means for the small players, for the explorers like us, there's a big demand for copper exploration in decent areas.
It's very hard to find anybody wanting to bet against copper. Right? Very hard. Maybe just changing tack slightly. We haven't spoken about uranium yet, and we've got Stacey here. So really, uranium has a huge role to play in the energy transition. So, if you look sort of near term supply demand, you can make a case that it looks challenging both near term, longer term. It'd be great just to get your views on the outlook for uranium.
Yeah, I mean, long term, the demand is incredibly strong. So, on the demand side, I mean, we're seeing more and more positive, unrelenting news flow in favour of nuclear energy. Particularly, a lot of governments and industries are certainly considering nuclear energy as the solution to the climate crisis and the energy crisis. And then in 2023, at COP28 event, 22 countries signed a declaration to triple nuclear capacity by 2050. That number's now grown to 31. An additional 20 plus something countries have also expressed an interest in signing that same declaration. Last year, 14 of the world's biggest banks have committed to that same pledge. And then just last week, 3 of the biggest tech giants, Amazon, Google, and Meta, they've all signed on to commit to that pledge as well. So demand for uranium, for nuclear energy is very strong, driven by those global decarbonisation goals, global electrification, and then the voracious energy appetites of AI and data centres. And it will continue to be very strong in the medium and long term. It's the supply side which is incredibly challenging. It's actually a situation that has never been seen before. I would describe the supply situation as incredibly fragile. It's been affected by, decades of underinvestment post Fukushima, which has resulted in scarcity of new mine supply, inventory depletion, lost IP, lost employees, lost personnel, and because of that supply situation, we're now looking at a £60 million annual deficit, which is expected to grow to £240 million by 2040. How are we going to meet that when there's also long lead times on greenfield projects? There's so much complexity in permitting a uranium mine. They take 10 to 15 years to permit. Even if there was an amazing project found tomorrow, you're still not looking at the supply coming online for 10 to 15 years from now. So it's an incredibly trepidatious situation, but the fundamentals for uranium have never looked better.
And just sort of near term, we've obviously seen a bit of weakness in price, and I think obviously that's, in fact, maybe impacted a bit of sentiment. We're off about 10%,
Yeah.
I think, over the last 3 months. What's the rationale for that near-term price outlook?
Yeah, it's completely sentiment driven. AI has been fueling the nuclear narrative lately. The news release about DeepSeek AI being more efficient, a lot of people took that to mean that would mean less energy required. But in actual fact, there's this theorem called, I think it's Javan's paradox, greater efficiency drives greater demand. So DeepSeek being more efficient actually means more demand in the future. But in actual fact, like, AI is a small part of the nuclear story. As I mentioned before, ultimately the long-term fundamentals remain the same. So to answer your question, sorry, I rabbited on a little bit there. The weakness in the short-term price, in the uranium spot price, is largely sentiment driven.
Okay. And maybe just, again, keeping that sort of thematic of sort of demand outlook, with Russia, if Russia comes back into the fold again, sanctions are dropped, et cetera, which I think, under the Trump administration is obviously appears to be an aim. What could that mean for uranium, the outlook for uranium?
Yeah, I mean, the de-escalation of Russian tensions will certainly have an impact, albeit short term. Currently, Russia supplies 30 to 35% of global enrichment services in the uranium nuclear fuel cycle. So that will release a little bit of pressure off the current bottleneck that exists from Western utilities. That being said, there's still a trust deficit. Countries are still actively de-risking their supply chains away from Russia. And there's been a lot of legislation and policies supporting Western utilities, Western countries developing their own energy systems, establishing their own energy independence and energy security.
Thank you. As we sort of move into the sort of final sort of 10 minutes, I mean, maybe just touching on the junior sector a little bit. And Rob, I'd just like to turn back to you a little bit. What do you think investors are really looking for from juniors at the moment, and some of the challenges you're seeing in, accessing capital?
Well, what investors are looking for is 10 times their money on any investment they make in what we do, and the challenge is meeting that expectation. very quickly. But and that's always been the case in the sector. I think there's been it's been a tough few years in the junior sector actually, and what you're seeing at the moment is a lot of people's portfolios are fairly burned. I think it's going to take to see these things go in cycles. Everyone knows this. To see the next proper cycle where people are starting to get positive and there's a general increase and there's sort of a rising tide lifting all boats to some extent, and the ones that really have the fantastic projects fly up, that's going to probably take, I would say, 6 to 12 months of elevated prices in sort of across a range of important commodities, and then you'll see that coming back, and probably some new money coming into the sector, and probably it's what they call sector rotation, where people have made a lot of money in, for example, the tech space over the last 10, 15 years, and if people think that's looking a bit toppy, they probably should have got out a month or two ago, but I think it's true. Then the large generalist funds do look for sectors that are undervalued, and I think fundamentally the upstream mining sector is undervalued. It'll be the big guys that see it first, and then slowly it'll come down into the explorers and developers. I think that the challenge is just getting market attention at the moment. It's been a tough few years, and so you need to get a project up and off the ground like an IPO. You really need something pretty special at the moment. It's not like you could just list any old thing, but it's going to take a few years for this to work through the system. But ultimately, you will get to a point where some people coming in with very good projects, be it in copper or anything else, maybe uranium, will get people. It will go up 10x or more, and then that sort of begets confidence throughout the sector. But I think there's not a shortage there's a shortage of good gold projects out there at the moment, because gold's been good for a long time, and those projects have pretty much all been dealt, if it's any good at all. But for everything else, base metals in particular, there's plenty of really good projects out there that are just really struggling. So finding the good projects to invest in is not bad. It's just getting that overall market sentiment to improve, and it's going to take. I just think it's going to take some time.
Yeah, I agree with everything Rob just said, but I think the other thing, markets in the Western world, mainly, they're still in pretty much a risk-off environment, especially with high interest rates, with private credit markets giving high double-digit returns. There's just no risk capital for the smaller end of the market at the moment, and there's every one of the companies here, they've all got something to offer, and they've all got potential for great value, but they're competing for shelf space against another 2,000, 3,000, 4,000 companies that are listed. And I joke about it, but I shouldn't. I say it's every time you meet a company, it's the exact same story. And I believe every one of them. But for a market that's only got this limited pool of capital right now, they're all competing for that same dollar, and it's just really, really hard. And until interest rates start to come off and private credit starts to come off, I think it's going to be really tough to raise capital. And I try to tell a lot of the unlisted companies that we speak to stay unlisted for as long as you can, further to Ling's point earlier. So I'm really sorry, but I don't see risk capital coming back to the smaller end of the markets anywhere for at least 6 to 12 months, probably 12.
I think there's some good thematics coming out in that. I mean, certainly it replicates what I see. A lot of companies come through and, you're seeing sort of, 8% discount rates used, and that's not reflective of the cost of capital and where returns you can get in the private credit markets for investors at the moment, right? So it's challenging. Yeah.
Yep.
So I think there's a bit of realism. And secondly, coming back to that point, I do think, what the role of private capital has to play in the space and keeping companies private for long before they come to market, maybe not as single asset companies, because, as we just see the overheads of running just a single asset company with increasing ESG rules, reporting, etc., it's expensive and not also that efficient for investors. So, listing things later in life is probably going to be a thematic, right?
Yeah, and I think that's a strategy more companies should employ, stay private longer. The only other thing I would add is if we look back to these massive runs that we've had in global markets in the past, when it happens quickly. And so if you're starting to consider putting some cash back into some of these smaller listed companies, it probably isn't a bad time to start looking for value now if you can just ignore any volatility over the next 6 to 12 months. If you've found a really good project, the chances are when that risk capital comes back, it will happen really quickly and the markets will rise really quickly again.
Maybe just one sort of final question before we open, and that's, you know, in terms of sort of improving the investment environment in this space, really I think governments have a big role to play, right? I mean, what could governments be doing just to literally improve things? I mean, you've seen Trump this week, you know, basically, you know, try and reduce permitting timelines, etc., abolish various rules just to try and stimulate, you know, U.S. mining, right? The U.S. mining sector. I mean, that's an, you know, it's an interesting approach, and you know, but what do you think, you know, generally? I mean, maybe I'll ask go to you, Stacey, first. What could governments be doing to help investors here?
Yeah, pretty much more of the same. We should really encourage more stable, predictable, supportive policies to provide a legal framework to encourage all that investment and financial backing into the sector. So streamlined regulations, for example. I know in Canada, the current Prime Minister, Mike Carney, he's looking to expedite mining projects and reduce the time it takes to permit projects, more things like that. Tax credits like the US Inflation Reduction Act. Yeah, just more of the same.
Sorry, Shaun. Are you just going to talk about your own technologies again? No. I'll get you. I'll give straight back to you. But I would just say, what Stacey's talking about is very definitely true for the developers of the world and sort of midstream type things. That's very important. But you know, where we are at the pointy end in exploration, you know, it needs money. And as Shaun correctly pointed out, you know, that dollar is hard to find and it's very competitive. And you know, you've got crypto out there now sucking up similar, you know, dollars that are looking for you know, high returns. And honestly, I just think more countries, especially those that have a significant mining sector, should employ what the Canadians do in terms of the flow-through share scheme. I mean, it's unbelievably valuable when the government is effectively paying for, you know, 50 to 80% of your. Oh, sorry, I shouldn't say that. It's about 30 to 40% of your exploration costs. It's incredibly valuable. It can be higher if you do the charity flow-through. And okay, and all you're giving up is the future tax credits that you would get if you get into production. And you know that, so the government does get their money back on some of these things eventually. But you know, for those that don't make it, well, at least you know you tried. That's really valuable for an explorer, and I'm just amazed that other countries haven't tried this. It's because it's a great mixture of government support, but not choosing winners. You know, effectively, you need to be able to raise the money on your own terms first before you get the advantage of that. So you do let the market choose the winner. And sorry, Shaun, you were going to say something.
No, again, I agree with everything you say, but I think governments, they should just get out of our way. And I don't mean that...
Other than giving us money through the flow-through share scheme.
Well, I don't mean that irresponsibly, but I mean, and I'll use Australia as an example. There are just so many rules and regulations, and the time it takes for everything, it's obscene. And we just keep adding laser complexity to permitting, and it just shouldn't be happening. If you want to bring risk capital back into these markets, you want to build these industries, get out of our way and let the innovators have a crack instead of blocking them at every opportunity they get.
Yeah.
I mean, I would say though, within reason though. I mean, one of the reasons why mining has had a very bad name for 100 years is because people in the past, there was no government regulation. There was a lot of mistakes made. Yeah, you're right. I mean, it's gone way too far, as these things do. The pendulum swung way too far the other side, and you need to find that happy medium between sensible government regulation and safety and environmental, et cetera, and being able to actually get things done in a reasonable time frame without being because a lot of these small companies I deal with, you deal with, there's one or two people in the company that effectively do everything. And if you shower them with paperwork and red tape, it's impossible to get real work, investment, things that actually improve the value of the company to get that work done.
And I think from an investment perspective, you then get into the debate around what is actually a favorable jurisdiction to own a project. And it looks very different, in my opinion, between whether you're at that exploration development stage or whether you're at the operating stage. Certainly, I mean, you can look at Australia, look at New South Wales, some of the issues you've had recently with projects being developed. It's hard to make a case for investing in a developer in New South Wales. Very good. At this point, I think maybe we'll just open the floor to the audience and see whether there's any questions.
Is this the one I asked you to ask me? Or? Okay. Yeah.
No, it's a good question around flow-through. It's a good point you make, but actually, it actually produces a different reaction. In Canada, what happens is a bunch of really mediocre projects go through flow-through. And so the legitimate projects that are going into other places of the world are stifled somewhat by all of this flow-through because, we spoke earlier, my project's in Australia, I'm in Canada. Well, obviously it doesn't apply to me. And I would argue that there's a bunch of projects in Canada that get funded where that small amount of money goes in the wrong direction. So I think there's a bit of a backlash in Canada about this flow-through. There could be a case for some of the super funds or the amount of investment by some of the investment banks in Canada in Canadian projects is pitiful compared to the Australians. So they have to, spend a large proportion of their funds in Australia. So I'm not quite sure if the flow through is really working to its most efficient state. It's just a good comment, really.
Yeah, I was going to say, is there a question there? No, I'm just kidding. Steve, right?
Yeah.
Well, look, first of all, one person's mediocre project is another person's world class, as you know, depending on how you market it. But also, I would say, yes, you're right. There's on a global scale, there's inefficiency of capital distribution for that reason. But if you're the Canadian government, isn't that what you want? You want to encourage exploration into your projects at the expense of others because you want to encourage your own mining industry. And yes, that might mean a mediocre project in Canada gets up above a better project in Tasmania, for example. But that's the government of Canada's prerogative to try and encourage mining in their sector. And if everyone's doing that, then you would have a more efficient marketplace. But I take your point.
Yeah, Newfound Gold is a good example of wasted.
So I've heard.
Okay.
Very good. Any other questions?
My name is Brian Leedman. I just want to ask a question just in your thoughts about Australia's investment in solar energy panel production when we're clearly competing against a giant maker like China, and whether or not there's any point to it.
We got a lot of sun in Australia, but no. The panels that come out of China are fantastic. They're cheap. We destroyed our manufacturing years ago with expensive labour. I think it's just another one of those rubbish things that the government put out there to make it look like they're bringing jobs back to Australia. But the reality is we're just going to keep buying our panels from China. And we probably should.
This is the basis of international trade, right? I mean, some countries do things better than others, and that's the point. And if China wants to expend a lot of energy and time and effort building up its technology and getting its manufacturing base so big that they can undercut other places, I mean, it's just other countries can try to compete, and other countries probably can compete, but not all. And you sometimes have to accept that what you're good at is not the same as what another country is good at, and I would, you can't have it all. Although maybe Trump thinks America can, but I don't think that's going to work out.
I think it's challenging, right? And I think people forget as well that it's not just that manufacturing base; it's actually the tech in China as well. which you get, people are improving as well. There's a lot of people, research, etc. And, to try and replicate that and the depth of that is very hard.
I think another example is about Saudi, who's trying to establish basically the entire industrial supply chain from scratch. It's almost impossible. You need a whole system. You need the people. You need, basically the entire supply chain to enable you to do that.
And I think people also forget that there's 1.4 billion of a domestic market there that allows China to sell into straight away. And that gives you that economies of scale to then go overseas, which, well, most countries, well, every other country doesn't have, apart from India. Saudi certainly doesn't have. Yeah.
And I think certainly when you get into manufacturing processes as well, and hydroxide chemical plants, you forget that the waste streams are actually a cost ex-China, right? And that's another huge issue. So, any other questions? Okay, well, let's wrap up there. Look, thank you, everybody.